So over the last few days, you guys have all seen the news on the Russia and Ukraine disaster that is taking place at the moment, and I thought this would be a really good opportunity to enlighten some people of what actually goes on inside the markets when a war of this stature takes place. So in today's video, I'm going to be giving you guys some information, some tips, and some sort of explanation as to what's going on with this war and how it's affecting individual markets inside of the financial system. So we have a lot to discuss in today's video, so without further ado, let's jump into it. But before we begin, if you guys are new to the channel, make sure you're subscribing, and if you do enjoy this content, make sure you give this video a thumbs up because it does help me out and it does help the channel out. In this video, I'm going to be breaking down what is going on, as most of you know what is going on, and I'm also going to be explaining what the sanctions are and what they mean for not only the Russian economy but for the financial system throughout the whole world. So without further ado, let's jump onto the charts. So first of all, to get an idea of what happens on the markets, we first have to understand the sanctions that are currently being put in place for Russia. So at the moment, these are the sanctions being put in place from the EU for the sanctions over Russia invading Ukraine. So the financial sector has been sort of sanctioned against. The energy and transport sectors have been sanctioned. Russia is a huge distributor of energy. This natural gas. They're also a huge exporter of commodities, which is oil. And I read something that like 30% of Russia's GDP is actually from gas and energy supplies that they provide to the European Union. Dual use goods, as well as export controls and export financing, visa policies, and additional sanctions against Russian individuals. Essentially, Russia is being targeted for their billionaires. So if you are a rich person that lives in Russia or outside of Russia and has businesses outside of Russia, then you will be sanctioned as a part of a crackdown on just Russian assets. One of the most high profile Russian billionaires, called Roman Abramovich, is the Chelsea owner, and there's been a lot of talk about him possibly stepping down and a lot of talk of him being deported actually from the UK. It also says here that, however, let me get rid of that. It also says here, however, both the EU and US decided for the time being not to cut Russia off from the SWIFT global interbank payment system. So for those that don't know what the SWIFT system is, the SWIFT system, or Society for the Worldwide Interbank Financial Telecommunications Facilities, financial transactions and money transfers for banks located around the world. The financial system is overseen by the National Banks of Belgium and enables transactions between more than 11,000 financial institutions in more than 200 different countries around the world. Apparently, for what I've read, that this hugely affects Russia, and apparently like 400 billion was wiped off the markets just because of these sanctions alone. So what I'm going to do now that we have sort of an understanding of what's going on inside of the Russian financial system, we're going to now jump over to the charts and we're going to see what is going on over on the charts, because it's actually really interesting. I was saying in the Telegram group that you would want to shut down any positions that you have on any Forex pairs. And this is because you don't want to be risked getting gapped out. If you want to join this group, I send over not signals anymore, but I send over information. I send over possible trade setups and what I'm looking for in the markets. There's still a lot of value in this, and I'm also offering one-to-ones now. If you want to get into one-to-ones, all you're gonna have to do is just make sure you email me, findingforex@gmail.com, and we can get you booked in. Each session is £40. Not only do you get a one-to-one session, but you get lifetime signal access to the VIP signals group. So here we go. I said, if anyone has any open positions, regardless of currency pair, I would advise closing them up before markets close. Gaps are probable given the current global situation. This was on Friday, the 25th of February at 9:20. So about 40 minutes before the markets closed, I was letting everyone know, and I was predicting that there's going to be gaps inside the markets. And what happened? gaps did appear, and I'm going to take you through some of those gaps right in this video. So this is the Russian versus US dollar. This is coming to an all-time low, and to be honest, because of what's happened with the SWIFT interbank system and Russia being banned from it, Russia's main bank can't actually hold the Russian dollar high enough because they're not allowed to trade. So essentially this also means that they could be in for a huge long few weeks where the Russian central bank can't push price higher and the ruble just collapses under its own weight from so much pressure from other things. Anyway, so there was gaps on lots of different currency pairs as of today. So we're going to go down onto the 4-hour time frame because you can see it a bit more clearly. So if we go up to here, right, so on market open, so this was the gap for GBP USD. So if we go on to date and price range, so we closed on the 25th of February, we closed up here, and we actually opened all the way down here. So we actually opened at over 100 pip gap. That gap has now been filled, like most of them when they traded into this morning. Most of the gaps have been filled, but still 100 pip gap is ridiculous. Same with GBP JPY. We closed down here at 154.844, and we actually opened just about 160 pips to the downside at 153.287. Once again, this gap has been closed. If you do trade gaps, this would have been a beautiful opportunity for you. There was a smaller gap on GBP AUD. That gap has been filled pretty quickly. NZD USD, this is where the gaps start to appear very bigly. That's not a word, but they start to appear really big. So this was a noticeable gap. This gap opened at 78 pips, which isn't actually a lot, but the gap is actually bigger than what we had on GBP USD. Not in terms of pips, but in terms of like less pips accumulate on this, and it's complicated. But as you can see, that gap is noticeable. That gap has now been filled. GBP, NZD, JPY, no gap. We had a huge gap on the euro versus the US dollar. We actually had 150 pip gap that has since been closed. Gold also gapped quite massively. As you can see, this gap, huge gap here. We've almost filled that. You couldn't even say that we filled it. And then AUD USD, once again, we had a huge gap on AUD USD. So we closed up here and we opened all the way down here for a 73 pip gap. Now, these are huge gaps, all caused by what is going on inside the EU at the moment. So there's going to be some tips in this video, so make sure you definitely stay tuned. And if you haven't liked the video at the moment, make sure you do. So if you guys didn't know, investors like to store their money in safe havens during times of war and uncertainty. So what are safe havens? What are safe currencies? So first of all, the US dollar is a safe currency. It is first of all a global currency, which makes it pretty valuable almost anywhere on the planet, which is why investors want to put their money into the US dollar. And also investors want to invest their money into things like the Japanese yen, which is another safe haven currency. These are considered risk-off currencies. So for the moment, I would not advise, in my humble opinion, that you either buy any GBP pairs or sell, most importantly, any USD pairs or Japanese yen pairs, because I do believe that maybe once we get a retracement to this 61.8 Fibonacci retracement zone, we will see a continuation back to the downside, because once again, uncertainty, war. Also, Putin did mention that he's putting his nuclear arms leaders on a higher alert, which is never good. Nuclear war is not the answer, in my opinion, and in pretty much everyone's opinions that you speak to. Unfortunately, this is the case, and this is war. So another place that you'd want to store your money is within the Japanese yen. And the last thing that you'd want to do as an investor to store your money is invest your money into gold, because gold, once again, is another safe haven. So what I would advise doing over these troubled times and these pretty turmoil, traumatic times is definitely just because you're seeing a slight push up on the Japanese yen up here. I would never advise buying it. Although you've seen a nice bullish candle here, and you've seen bullish candle here, and you've seen bullish candle here, they could just be closing this gap here. And once this gap's closed, which it has, we could now be seeing some more movement back to the downside. So we should see the fill of the gap and then some more movement towards the downside. We just don't know. But for the moment, I would never advise selling the yen or selling the US dollar. If we look on the DXY is actually up for the day. So for the DXY, we opened here. And obviously, we've made some pretty phenomenal gains already. So for the moment, make sure everyone stays safe. Do not buy any of the pairs that I've just mentioned. So don't buy the NZD, don't buy the pound, don't buy the euro. For the moment, I would not even consider trading, and I've been trading for about 4 or 5 years now, and I would not be looking to buy the euro, I would not be looking to buy the New Zealand dollar, and I would not be looking to buy the pound. All of these are considered risk on currency pairs, and at the moment with the war and the current situation, investors just will not be buying these certain individual pairs. But let me know what you guys think down in the comment section below. If you are new to the channel, make sure you subscribe. And if you did gain any value from this video, make sure you give it a thumbs up. But thank you all so much for watching. This is Luke, and I'm signing out. Peace.